Welcome to the Luxury Market Report, brought to you by MansionArizona.com. I'm your luxury real estate professional, Jeremy Poehls, and in this episode, we're going to take a look at the luxury real estate market in Paradise Valley, Arizona. The Paradise Valley single-family luxury market is a seller's market with a 45% sales ratio. Homes sold for a median of 100% of their list price in April of 2022. The luxury benchmark price remains at $1.7 million. Total inventory was 91. Total sales were 41. The price band with the most sales was $3.4 to $3.8 million, with 9 homes sold. The price band with the most inventory was the $7.5 million plus, with 36 homes available. The median sales price was $3.63 million, up from $3.22 million last year, a 13% increase. Total inventory was down 25% compared to last year. Total sales were down 34%. Days on market were a staggering 17 days compared to 46 last April. An interesting note, we are seeing in multiple markets that though inventory is increasing and demand is softening a little bit, we are not seeing a dramatic rise in days on market. Now for some insights on the global luxury market from our partners at the Institute for Luxury Home Marketing. The global demand for luxury real estate. The ebbs and flows of the luxury real estate market continue to be fascinating, while still providing some unexpected twists and turns. At the beginning of 2022, experts had predicted a more traditional year, but reality tells a different story. Much like actors, the players in the luxury real estate market need to have the ability to adapt to meet new expectations as well as the demands of the audience. But equally, they must recognize that longevity and ongoing success commands a hefty price tag. That success has now gone global, if not viral. While the ownership of luxury properties throughout the world has always been a part of the affluence portfolio before the pandemic, the pace of decision-making and purchasing was so much slower, with the inventory levels far exceeding the demand. From London to Miami, Los Angeles to Sydney, the increasing demand for luxury properties continues at unexpected levels. At the same time, inventory availability decreases and prices increase, further compounding as more countries open up and return to some semblance of normalcy with the return of the international buyer. Looking back over the last 2 years, it has been interesting to watch how the global demand has developed and determined the impacts on the world's luxury real estate markets as we move into the rest of 2022. While it cannot be declared that the US and Canada were the trendsetters in the meteoric increase in purchasing luxury properties over the last 2 years, the comparative statistics indicate that North America recorded the fastest growth of demand during the first year of the pandemic. Also, demand has not only not diminished, but consistently increased, and even in April of 2022, we saw a higher sales volume compared to 2021. At the start of the pandemic in 2020, the demand for luxury real estate took much longer to appear in other parts of the world. In Asia and Australia, most countries initially handled the onset of the pandemic effectively. There was little need to rush out of the city or change their current abode. Whereas in Europe, whole cities and countries were in lockdown, so the process of buying escape properties was slowed by the initial difficulty of not being able to travel. South America saw an equally slow start in purchasing luxury properties, as the pandemic took much longer to take hold, waiting for the cooler months of the summer in many of these sub-equator countries. Despite the slower start outside North America, after reviewing the overall global trends during the last 2 years, we can see that several factors were key determinants in the growth of demand for luxury properties in 2021. Rising global wealth, increasing numbers of affluent individuals, investment return opportunities, and the growing importance of intrinsic value that a luxury property offers have all been instrumental. We can see this global change more clearly by looking at the numbers provided by WealthX for individuals with a net worth of over $5 million through a comparison of growth from 2020 to the end of 2021. In 2020, their global wealth grew by 2.1% from $61 trillion to $62 trillion. But in 2021, it exploded with a 20.4% increase of $12.8 trillion, equaling a growth of wealth to over $75 trillion. However, it is more likely that the population growth of these individuals with a net worth over $5 million could be the most important factor in the dramatic decrease in inventory levels. In 2020, we saw a 2.2% growth in the number of individuals with a wealth over $5 million. But in 2021, that number grew by an outstanding 19.8%. This total increase has resulted in the introduction of over 660,000 new individuals into the high net worth bracket, which, combined with the existing affluent looking to both diversify and add new properties to their portfolio, provides true insight into why the demand for luxury properties skyrocketed during 2021 and 2022. While this growth of wealth and the individuals with this wealth undoubtedly created one of the most significant impacts on the demand for luxury real estate, what is truly fascinating is some of the unexpected diversification of where the wealthy are buying and why. Since reopening its borders, Australia has seen a significant interest in Sydney and Melbourne's luxury real estate markets, and despite their tight foreign ownership rules, demand has been extremely high. In the past, distance and remoteness were a hindrance, but these factors are now considered a benefit in today's world. Throw in additional tax incentives for relocating a business, and the elites start to look at the viability of moving here. Looking to India, we see predictions for a continuation of a strong luxury real estate market. Delhi, Mumbai, and Goa have already seen the ultra-rich invest heavily in high-end properties. The widely traveled affluent are leading the charge as they have experience living in more luxurious accommodations and are ready to spend their wealth on luxury real estate to upgrade their lifestyle in a city of their choice. Dubai has seen a resurgence in its market in the last 6 months. Despite all the negative press about Russian oligarchs using it as a hiding place, Dubai recorded its best quarter since 2010, with top investors coming from the UK, France, and Italy. Europeans have dominated investment, but increasing numbers of individuals from Canada, India, and even Pakistan are taking significant interest as visa reforms and economic stability have proven successful draws. The great exodus from London in 2021 saw British locals moving out to the countryside and foreign investors either returning home or choosing to invest closer to home. However, the first quarter of 2022 marked a significant return for both types of affluent property buyers. One of the unexpected twists is the increased demand for properties at the very high end of the market, driven by very wealthy buyers from the US and citizens of Hong Kong concerned about the long-term impacts of their city's transition to Chinese rule. Moving away from the big city lights to the coastal and mountain retreats such as Monaco in France, St. Moritz in Switzerland, and other similar locales that have always attracted the mega wealthy, inventory levels for some of the most expensive properties in the world have not only been depleted, but have seen unimaginable price increases. Innovative developers may ease the burden slightly in Monaco with the building of an eco-development, reclaiming land from the sea, and luxury development in the heart of Lavroto, offering 56 apartments with wraparound balconies and 5 villas, each with a rooftop terrace, private pool, and all having Mediterranean views. As global demand for luxury homes continues to increase, the opportunity for developers and builders holds a world of opportunity, innovation, and of course, financial gain. In North America, cities were high on the list for the wealthy, especially Washington, D.C., New York, Los Angeles, Miami, and Honolulu, with individuals desiring a return to downtown lifestyles. And more than 10% of luxury searches were conducted by foreign buyers, according to the data collected from Mansion Global. One trend this analysis of the global market for real estate demonstrates is that the affluent are on the move again, and North America will probably be one of the largest beneficiaries. The strength and stability of the luxury markets in Canada and the US over the last 2 years, not to mention investment opportunities in the growth of new real estate markets and luxury developments, will drive the incentive from international buyers.